Everyone, and welcome back. Today we're going to be doing a deep dive into something that's super relevant for a lot of you out there, especially young families buying their first homes. We're talking about mortgage protection and whether the insurance that's offered by the banks is really the best way to go about making sure that your loved ones are protected.
A lot of people, they just assume they have to go with whatever insurance the lender offers. But there are other options that might be a much better fit.
For sure. And a recent investigation by CBC Marketplace actually revealed some pretty shocking findings about the downsides of, just automatically accepting that mortgage insurance from the bank.
Yeah, they uncovered some pretty disturbing stories of families who were denied payouts even though they'd been paying their premiums all along.
Yeah, that's awful.
Yeah.
I mean, CBC Marketplace spoke to two women, Leanne and Charmaine, and their husbands both had mortgage insurance, but they were denied coverage after they passed away. So Leanne's husband, he died from a heart attack. But because he had been taking medication for a heart condition for like 10 years, the insurance company denied her claim.
And then you have Charmaine's husband. He was diagnosed with cancer, and they rejected his claim because he had a history of high blood pressure, which they considered a pre-existing condition, even though he said he didn't even know about it.
It's like these families were already dealing with the grief of losing someone, and then they get hit with this financial burden on top of it all because their insurance claim was rejected.
Yeah, and what makes it even worse is that a lot of these denials are happening because of something called post-claim underwriting.
Okay, so post-claim underwriting, that sounds kind of complicated.
So basically, they don't fully investigate your medical history and everything until after you've made a claim. So you might think you're covered, but then something happens and they start digging into your past, and that's when they might find some reason to deny the claim.
Oh, wow. So they're basically waiting for something to go wrong before they really double-check to see if you're actually eligible for the coverage you've been paying for.
Pretty much. And that's where it can get really messy, especially with those long and complicated application forms that they give you.
Right. I mean, those forms are a nightmare. I remember trying to fill one out myself, and it felt like I was trying to decipher some kind of secret code. And actually, CBC Marketplace, they did a really interesting experiment to see how easily people could misunderstand these forms.
Yeah, they set up a mock application process on a dance floor. And they asked people just some simple health questions, and it turned out that
Pretty much everyone would have been disqualified from coverage based on their answers.
Exactly.
That's scary. I mean, especially when you're relying on that insurance to protect your family. So if going with the mortgage insurance offered by the lender isn't the best idea, what are the alternatives?
Well, CBC Marketplace, they highlighted a much better option that a lot of people don't even know about, and that's individual life insurance, specifically term life insurance.
So term life insurance, that's where you get coverage for a certain period of time.
Right.
Like 10, 20, 30 years or something like that.
That's right. And it tends to be a way better fit for young families buying their first home because it lines up with the time frame of your mortgage. And it has some major advantages compared to the mortgage insurance you get from the lender.
Okay, so like what makes term life insurance a better option?
Well, first of all, you own the policy. So with mortgage insurance, the lender is the beneficiary. So if something happens to you, the payout goes to them. But with term life insurance, you get to choose who the beneficiary is. So that's usually your spouse, your kids, whoever you want to take care of.
So you have way more control over where the money goes.
Exactly. And with term life insurance, you can change your coverage as your needs change too. Like let's say you have another child or your income goes up. You can adjust the coverage to reflect those changes in your life.
Got it. That's a big difference compared to being stuck with whatever the lender gave you at the beginning.
For sure. And here's another big perk, portability. So your policy moves with you. So if you switch lenders or you decide to move, you don't have to worry about applying for new coverage.
So it's not tied to a specific lender or property.
Exactly.
That's great for flexibility, especially these days when, people are moving around more often.
Absolutely. And on top of all that, let's not forget about the cost. Our team at Reinblatt Financial has found that term life insurance is often much cheaper than the mortgage insurance offered by the lenders, especially for younger, healthier families.
So you're saying it's more flexible and portable, and it could even save us money.
Exactly.
What else makes term life insurance stand out?
Well, this is the really reassuring part. The underwriting is done up front, so they assess your health and everything right at the beginning, so you know exactly what you're covered for from day one.
So there's no chance of them coming back later and saying, oh, actually, you're not covered because of this thing we found in your medical history.
That's right. And it's not just about paying off the mortgage either. You can use it for other things too, like covering your kids' education
Hmm.
or making sure your family can maintain their lifestyle if something were to happen to you.
So it's kind of like a safety net for your family's finances.
Exactly.
I think that's a great point to pause on because we've covered a lot of ground already. We've talked about some of the downsides of just taking the mortgage insurance that the lender offers,
Yeah.
and we've introduced term life insurance as an alternative. But we're just getting started.
There's a lot more to discuss. So before we went to, I guess, a pause there, we were discussing how individual term life insurance can be a really good option for young families when it comes to mortgage protection.
Yeah, and those findings from that CBC Marketplace report were really interesting, especially that part about those mortgage insurance applications.
Yeah, those applications can be so confusing. All those tricky questions and wording that can trip you up, even if you're trying to be completely honest. And then, as we were saying, that can lead to those claims being denied,
Yeah.
which is the last thing you want when your family really needs that protection.
Right. It feels almost intentional, like they're setting you up to fail.
Mhm.
So frustrating when you're just trying to protect your family.
And that's a key difference with individual term life insurance. The underwriting is done up front, so you know exactly what's covered right from the start. No surprises, no hidden clauses or gotchas, just straightforward coverage.
Yeah, that peace of mind is so valuable, especially when you're talking about something as important as protecting your family's financial future.
So let's say we're convinced that individual term life insurance is the way to go. What do we need to think about when we're choosing a policy?
Well, the first thing you need to figure out is how much coverage you actually need. This can be a bit tricky, but a good rule of thumb is to consider all the financial obligations that you would want to cover if something happened to you.
So we're talking about more than just the mortgage, right?
Exactly. Things like other debts you might have, like car loans or credit card balances, and then future expenses like your kids' education or even your spouse's retirement.
It's about creating that safety net for your family. But how do you actually figure out what that number should be? It feels overwhelming. Yeah, it can definitely feel like a lot. But there are tools out there to help you. Like you can find some online calculators that can help estimate your life insurance needs.
So those calculators can give you like a starting point.
Yeah.
But are there any other things we should be keeping in mind?
Yeah, it's always a good idea to chat with a financial advisor. They can really help you figure out what your individual needs are. Look at your long-term goals and make sure that the amount of coverage you choose actually makes sense for your family. And often we at Reinblatt Financial are able to find much better deals for our clients than what the bank is offering.
Right. Everyone's situation is different, so a one-size-fits-all approach isn't really helpful. Okay, so we've got a handle on how much coverage we need. What's next?
Well, now it's time to shop around and compare different policies. Just like anything else you buy, you want to make sure you're getting the best value for your money.
Okay, but where do you even start? Are there certain things we should be looking for when we're comparing these policies?
Definitely. Some key things to focus on are the length of the term, the premiums you'll be paying, and any additional benefits or riders that might be included.
Okay, so let's break those down a little bit. First up, what about that term length?
The term length is the number of years that you're going to be covered by the policy. Most people usually choose a term that matches the length of their mortgage. So if you have like a 25-year mortgage, you might go for a 25-year term life insurance policy.
So you're covered for as long as you have that mortgage to pay off.
Exactly. But you might also want to consider things like how long you expect to be financially responsible for your kids, or if you want to extend that coverage into your retirement.
So it's about looking at the bigger picture and not just matching it to your mortgage.
Right. And then, of course, there's the cost. You'll want to compare those premiums from different insurance providers to see what's actually affordable for you.
Right. Those premiums are those regular payments that you make to keep the policy active, right?
Exactly. And the premiums, those can change quite a bit. It depends on things like your age, your health, how much coverage you need, even things like if you smoke or not.
Wow. So it's really worth shopping around and seeing what's out there.
For sure. Don't just settle for the first quote you get. And this is where a financial advisor can really come in handy, because they often have access to special rates and discounts that you might not find on your own.
So potentially even more savings.
Absolutely.
You mentioned riders earlier. What are those all about?
So riders are like add-ons to your basic policy. They can give you extra protection or benefits. So for example, you might be able to add a rider that covers you if you become critically ill or get disabled.
So it's like customizing your policy to fit your needs.
Exactly. And some riders are designed to help your family with certain costs if you pass away unexpectedly. For instance, there's one that can help with funeral expenses.
That makes a lot of sense. It takes care of all those extra little details that can add up during a difficult time.
Right. So when you're comparing those policies, make sure you ask about what riders are available and if any of them would be a good fit for your situation.
Okay, so to recap. When choosing a term life insurance policy, we've got to think about how much coverage we need. Compare those term lengths and premiums and see what those optional riders are all about. It's a lot to think about.
It can be a bit overwhelming, but that's why working with a financial advisor is so important. They can guide you through every step of the process.
Yeah, they can answer any questions you have and make sure you're making the best choices for you and your family.
Exactly. They're there to help you understand everything and make sure you feel good about the decisions you're making.
Perfect. So I want to make sure we're being super clear for everyone listening, especially those younger families who are new to this whole insurance thing. So let's do a super quick recap of the advantages of getting your own term life insurance instead of just going with what the mortgage lender offers.
Sounds good.
All right, so first up, control. With individual term life insurance, you get to decide who gets the money if something happens to you.
Right. It's
Yeah.
your policy, your choice.
Exactly. Then there's flexibility. You can change your coverage as your life changes. New baby, new job, whatever it is, you can update your policy.
And don't forget about portability. It moves with you. New lender, new house, it doesn't matter. You keep your coverage.
Right. It's not tied down to anything specific.
And we can't forget about the potential cost savings. Individual term life insurance is often much cheaper than those bank-offered policies, especially for young, healthy families.
So better coverage, more control, and potentially even saving money. Sounds like a pretty good deal.
It really is. And then there's that big one, peace of mind. With term life insurance, you're covered from the very beginning because the underwriting is done upfront.
Right. No worries about denied claims or hidden surprises.
Exactly. It's all about protecting your family's future.
Especially when you're a young family just starting out. It's so important to know that your loved ones will be taken care of no matter what.
Absolutely.
All right, so welcome back to our deep dive into mortgage protection.
So right before that little pause, we were about to get into some examples of how these different types of coverage could play out in the real world.
Perfect. So let's picture a young couple, Sarah and David, buying their first place together. They're super excited about starting a family, but they're also a little bit overwhelmed by, all the financial decisions they have to make, including this whole mortgage protection thing.
Yeah, it's something that a lot of young families face. They know they need mortgage insurance, but they're not always given all the options or all the information.
Right. So the lender offers Sarah and David mortgage insurance, but they're also thinking about individual term life insurance, especially after hearing about some of the potential issues we talked about earlier. So what should they be thinking about as they're making this decision?
Well, I think first and foremost, they really need to consider their overall financial goals and priorities. Are they just trying to cover the mortgage if one of them passes away? Or are they looking for more comprehensive protection that could help with other things too, like childcare costs or education expenses or,
Right.
just being able to maintain their lifestyle?
So it's about looking at the bigger picture, not just the mortgage itself.
Exactly. Another big factor is their health. If Sarah and David are young and healthy, they'll probably qualify for lower premiums on a term life insurance policy, which would make it even more cost-effective in the long run.
Right. Younger, healthier people are less risky for insurance companies, so they usually get better rates.
Exactly. And they should also think about the flexibility and portability that comes with term life insurance. If they're planning to move or refinance their mortgage in the future, having a policy that's not tied to their current lender could really benefit them.
So it sounds like in their case, individual term life insurance might be the better choice, especially if they're looking for that broader coverage and lower cost and more flexibility.
I would say so, yeah. But of course, every situation is different. So it's always best to talk to a qualified financial advisor.
Right. Like the team at Reinblatt Financial. They can help Sarah and David figure out what's right for them and their budget.
Exactly. They're the experts and they can really guide you through the whole process.
Okay, so let's switch gears a little bit and talk about some of the common misconceptions about mortgage protection. What are some of the things that people often get wrong about this?
One of the biggest ones is that people think mortgage insurance is mandatory when you get a mortgage, but that's not true at all. You can always choose your own coverage, like
Right.
getting an individual term life insurance policy.
So you're saying don't feel pressured by the lender to take their mortgage insurance if you don't want it.
Exactly. Another misconception is that term life insurance is just too expensive. And while premiums can vary depending on your age and health and how much coverage you choose, term life insurance is often a lot more affordable than people think, especially for younger folks.
And as we've been talking about, it can actually be more cost-effective than mortgage insurance over time.
Yeah.
especially when you consider the chance of getting your claim denied with those mortgage insurance policies.
That's right. You really have to look at the big picture. Consider the cost, but also the risks and benefits of each option.
So we've busted some myths and talked about the advantages of term life insurance. What's the key takeaway for everyone listening, especially those young families starting out as homeowners?
I think the most important thing to remember is this. Don't just accept whatever mortgage protection your lender tries to push on you. Take some time to understand what your options are. Do your research and make an informed decision that really works for you and your family.
I totally agree. Your family's financial future is on the line, so it's definitely worth putting in the effort to make the right choices.
And remember, resources like Reinblatt Financial are out there to help you every step of the way.
Don't be afraid to reach out and ask for guidance.
We're all in this together.
Well, that brings us to the end of our deep dive on mortgage protection. We talked about the pros and cons of different options. We busted some myths, and hopefully we've given you the knowledge to make informed decisions about protecting your family.
It's been great.
Knowledge is power, and by taking the time to really understand these topics, you're already taking steps to secure your family's financial well-being.
Exactly. And if you're ever feeling overwhelmed, just remember there are resources like Reinblatt Financial that can help.
Thanks for joining us on this deep dive. We'll see you next time.